What's up, founders, investors? Welcome back to Next Round Ready. I'm your host, Chris. Today we have special guest Aram Attar. This guy's a VC specialist. I'm excited for this conversation. Aram, welcome to the show.
Thanks so much, Chris, for having me.
So, what got you into the venture capital world?
So I got into VC at the beginning of the 2000s. Actually, I came from an LBO background. So for those who don't know, when you have the fund getting funded by venture capital, after a while it becomes big, it goes IPO or it gets sold to either a corporate, so that's merger and acquisition, M&A, or you can have a big private equity fund buy it. And that's what I was doing. So I went from big LBOs, $1 billion plus, but I wanted to be closer to the entrepreneurs because when you do a large LBO, you're talking to managers. So gradually I went to growth equity and then VC, did a little bit of M&A. So I think what drove me to VC was the excitement of technology and being very close to entrepreneurs.
Yeah, I would say it's one of the industries and the spaces where you can work really closely with the founders who are essentially shaping the world, if we'll be honest. Like a lot of these entrepreneurs are the people who are creating jobs, they're changing industries, this the innovation we see from founders and being able to have that attachment and get close to those people, it's incredible, honestly.
So it's funny because as long as I remember, I wanted to be an entrepreneur myself, and I'm a bit older than you are. So that was in the 90s when it wasn't as flashy as today. And I thought, okay, I'm going to learn with entrepreneurs. I went to McKinsey Strategy Consulting, and I was very far away from entrepreneurs. And then when I finally got close to entrepreneurs, I realized it's not for me, right? Because I think you're right. Some of them shape the world, but so many fail, and that's also a problem for them. But there's a way to overcome it. That's something I work on. But yeah, it's exciting to be close to people who have this vision. My thesis, because I've done a lot of research, and we'll talk about it, is research in psychology on them, is the best ones I've met, the best founders, are not easy people to live with or to work with,
Yeah.
but they have something that most people don't have, and that's what I'm super excited about.
Yeah, I agree. There is that difficultness of being around them, and they're not rigid. They're very like, I'm going to do what I want and what benefits me and my company. And it can come off as selfish or negative or even mean sometimes. But I don't know. I think we need those people in society to continue to drive us forward. Like, I don't think we get here without those kind of people with just the ease of life that we all have in the entire world. I just don't think we get that without some of the asshole entrepreneurs we have. Like, we kind of got to take the good with the bad.
I agree, and it's one of the I think the toughest things for entrepreneurs is this line to walk of don't listen to anybody, because if you do, everyone's going to tell you you won't succeed. But do listen to the few people who maybe will give you that advice that's going to help you and change your life, right? So for entrepreneurs, that's very, very difficult. Is they seem like assholes because usually they don't care about what other people think. That's a trait that we find in great entrepreneurs. I found that the great ones are good at learning from a few people who do give the good piece of advice.
Yes, exactly, exactly. And taking that in and having advisors and different things like that. So, what's your perspective on the state of venture capital now? AI is kind of taking all the VC money. It's just flooding the market with, if you're not an AI, essentially, and you're a founder, it's this uphill battle to raise anything. I would love to hear your perspective on this.
Yeah. So maybe as a bit of background, I stopped investing myself in startups a couple of years ago. Most of my investment work now is in VC funds. So I invest in VC funds, and I usually sit on investment committee, because all I'm about now, and that's why I founded the VC Factory, is the investment decision process. So that's my stuff. It's been 7 years. I've been working on that. We spend thousands of hours listening to VCs, understanding how the best one make decisions. So in terms of, where the industry is going, my point of view is not from an operator, even an operator, but a VC on the ground. Is more for someone who's looking from a bit above. And the people I see succeed, to answer your question, is not people who go for AI for the sake of AI, but for example, the last fund I invested in, it's a Boston-based fund. They look at how AI changes climate tech, right? So, for example, the last investment they did is a company that helps data centers save on electricity costs and be more efficient and so on. So there's a climate tech angle helped by AI, but it's not AI for the sake of AI, obviously.
That makes sense. I think some companies are doing the AI thing, and some founders are taking that route because they see all the biggest headlines saying blank AI got $100 million in funding, and they think, well, I have to be an AI to get the funding. So I think that's kind of the deception that founders are seeing and why it's driving them that way.
To be honest, it's the same at the VC level. So what I write is 95% of VCs today are money managers. And I don't want to, I know some people won't like to hear that, but they're money managers. They're not really investors. So they are the same thing. They are driven by FOMO. They hear AI. They are driven by all these buzzwords. And they are late on the bandwagon, and they're probably not going to make any return. So I'm not blaming founders, because many VCs are the same. And then you have the 5% VCs who, just like the top 5% of founders, are trying to walk their own path and trying to find something with value.
Exactly. And so I think more founders need to understand what VCs actually want. So being that you're somebody that works with different VCs on this higher level, like you said, that kind of bird's eye view, I'd love to get your perspective on what they're looking for in terms of the founders first. Like, what kind of founders are they looking to invest in?
Yeah. So I'll tell you about the best VCs, because many VCs, you go on the website and they're looking for everything in founders. They're coachable. They are great executioner and so on. And there is data that has been shown, they want people with industry experience, entrepreneur experience, and so on. I'll tell you what, as an experienced investor, and when I talk to people who are very successful, much more successful than I have been, I had my share of success, but mine was probably more due to luck than anything else. But the people who are able to repeatedly make outlier investments, the only thing, if you have to retain one thing, they care about is the driver. What is driving you to make this company? Because what? Because we all lost money, because it gets too hard, quick, and entrepreneurs abandon. They stop it. So your driver inside you needs to be so strong that you're gonna persist through all the difficulties. I always give an example, which is the founder of Calendly. I don't know if you use Calendly, but it's this calendar app that I love. And the founder is one of the first billionaire Nigerians, because Tope Awotona, his name is Tope Awotona. He was born in Nigeria and then came to the US. And this guy tried many companies, but kind of half-assed them. Like, he wasn't really in them. He was trying to be an entrepreneur. And then at some point he said, okay, you know what? I'm going to put everything in it. And his driver was that, and I'm sorry, it's a bit dark story, but his dad, who was an entrepreneur, has died in front of him in a carjacking in Nigeria when he was 12. And as a homage to his dad, he said, I'm going to be an entrepreneur. So that driver, plus, at some point he said, okay, I'm going all in. Of course, there's other things in success. He met the right people, there's luck and so on. But that's the kind of drivers VCs are looking for. Is why do you do that? Is it just because you want to be an entrepreneur at school, or is this something deep inside you that you want to go through 10 years of suffering, pain and suffering, as Jensen Huang said once?
That makes sense, because the idea can shift so many times, and you have to innovate and pivot and really switch things up. And if you have a founder you trust and you believe in as an investor, I'm pretty sure that makes it easier to believe in them, versus if you're just investing in the idea. And I think we're kind of at the point now where it's very, very hard. It's only going to get harder to find new ideas, but finding quality people is something I think we can always take advantage of.
Yeah, exactly. And, it's John Doerr, famous investor, said once, ideas are nothing, execution is everything. Yeah, the idea doesn't really matter, but how do you execute? And when I was a young investor, I thought, the TAM matters, and, the product market fit matters. And as you go along, you understand that the only thing that matters is the quality of the founder, and inside them is what's the driver. And I found this, so part of my research, what I do is, what we try to do, I didn't tell you, but I founded a VC Factory because we try and help LPs, who are the people giving money to VC funds, and GPs, the VC fund themselves, make better decisions. And so we try and tell them, this is what you should look in founders. And I found this theory in psychology that kind of divides, because if you had only one question, what would it be, right? And it's tried to divide, why do entrepreneurs do something? And it divides them in, are they trying to win, or are you trying to not lose? And entrepreneurs who are trying to win are very different from the other ones. So those who are trying to win, they are what we call promotion focused, they are the ones that maybe, I'm sure Chris, who will do anything to succeed. They don't care about the risk that much. They're going to try, and they're going to be out trying to sell to clients before making the product, those entrepreneurs. The other ones are those who are going to tell you, Aram, I can't ship my product. I need one more feature, and it's not perfect, and so on. So I can see that
Yeah,
that rings a bell, right? So
that
this
makes
is what I
sense.
do, right? It's trying to understand. That's why I'm pushing VCs to understand is try understand the driver. Ask founders, obviously, but also try with subtle signals to understand what have they done. Are they trying to win? Are they trying to learn? Or are they trying to save ego, to save face, not get rejected, and they're trying to not lose?
I want to talk more about this company you have now where you're helping the GPs and the people who work with the VC funds, because I don't think I've met anyone else that's in that space. It's such a niche area because it's not necessarily working with the bigger firms like Andreessen Horowitz or even Madrona in Seattle or any of the other ones like Y Combinator. You're working with the people who want to work with those people. So that's such a unique area, man. What's that been like?
So it's great and it's still developing because, yeah, I work with the two. I also work with people, maybe not Andreessen Horowitz. Like I've trained over the years large clients, like from big VC funds. They don't want to talk about it because they don't want to say, hey, you know what, I have this coach who helps me with decision making. But I've
Yeah.
been working on the investment committees and so on. What's been like, it's interesting because you realize that there are founders as well, like people who are in VC firms, who are, especially those who are creating their own VC firms. They're also founders. They're also trying to get, a deal flow. They're also trying to get money from other people and so on. And just like everyone else, you have the 95% who don't know why they're here and what they're doing, and the 5% who are super committed, super executing and hopefully delivering value.
Well, I want to ask you this too. Do you also work with angel investors in this way? Like the people who's like, I just had a big exit. I'm a founder, but now I want to become an angel investor. Can they come to you and say, hey, I need your help on choosing the right companies?
So I used to do that. I used to do that because I used to sell companies of founders. So it happened, in between being an investor, I was also an advisor. And I helped a few people sell the companies and they have a lot of money now. They want to invest in tech. They have great deal flow. So I used to help them. But I'll tell you what, I think being an angel is probably the worst position in the cap table. And for the following reason is that usually, unless you're super connected, you're going to have negative selection. You're going to have the bad deals coming to you. Even if you get a good one, which is rare, they're probably going to get you out at Series B before it gets juicy, right? The valuation gets really high because, VCs, I was a VC myself. We don't like to have too many angels after a certain point, unless the founders loves you and you're bringing value. So angel is like, you're going to lose most of the time. And even if you win, the likelihood that they take you out early is very high. So not a great position. So that's why, I give advice to angels, but that's not part of most of what I do.
Okay, that's an interesting perspective. That is I've never heard it put that way that you kind of get kicked out of the party before it gets good.
Many angels, that's a problem because, first of all, they can't follow on because most angels don't understand that you probably have to invest 1/3 or 1/4 of what you have in the first round and then keep the rest to keep, taking your prorata and hopefully, because you're going to have very few winners. So you probably have to double down on your winners. So many angels don't understand that, which VC firms do. And many times they are useful in the beginning, but as the company gets bigger, they're less relevant. Okay. And then also VCs, after a while, we want to have the founders, the employees in the equity, like in the cap table, and us, right? Because we want to be able to share the value like this. So I think I was a nice investor, but most of the time I was also doing the same thing. I was taking angels out at some point.
Okay, that makes sense. That makes sense. So, in your process, man, I'm dying to hear more about how you actually get down to the bones, the meat and bones of choosing the companies and really teaching this, because the investors I've talked to kind of all have their own formula or process for how they choose companies to invest in, but I've yet to meet someone who has like a formula that they've taught somebody else and they went and gotten good results. I have not seen that yet. So this is very new for me.
So, I used to train people on two levels. The first level, people I was training were people who were new to the asset class, people who had 20 years experience and were investing in VC. And so you had to teach them the basics, right? How to evaluate companies and so on. But I have to say, it's not the most interesting one. What I do now more is I train people who are much more experienced and I train them on the techniques, on the secret sauce, if you want, that the top VCs use. So I've been listening and I talk to a lot of very, very great VCs. And I realized that the reason why they're able to repeatedly make outlier performance, so not get lucky once, but make, the people we know, like we heard about Bill Gurley, Brad Feld, Fred Wilson. So I didn't talk to those, right? But I talked to people who are, on the Forbes Midas list, and that's what I'm doing for my next report. And to answer your question, what I'm doing is trying to instill the mindset of those people, which is that those people tend to do one thing is they don't trust their intuition right away. They're good at double questioning their intuition. In the words of Danny Kahneman, who's a Nobel Prize winner in psychology or in economics, but he's a psychologist, they look at their intuition, they delay it, collect data in a way that's honest, truthful, like a scientist. They're not trying to prove they're right. They're trying to get more information, and then they make a decision. So it's intuition, data, decision. And that's what I do with those people that I train. I train them in seeing their own biases. You meet a founder, don't worry about the accent, don't worry about the color, the gender, the ID. Maybe it reminds you of something that failed and you think he's going to fail or she's going to fail, but maybe that ID is different. So be more open-minded. Delay that intuition. Listen with an open mind. And so I can't tell you, okay, I know you guys love statistics, but I train 45 people and then they get 20% more performance. I don't have that stat yet. That's something I want to build. But what I can tell you is they become better investors just because they listen to their own cognitive biases.
That's a good one. The biases, I've had several investors tell me that feeling they get when they talk to a founder is the most important thing. And if they don't get that initial feeling, like a spark in a dating and relationships with that founder, then they aren't interested in investing. And it always kind of intrigued me because it's like you didn't think about anything else beyond that, or you don't even give them a chance, or because now your biases are taking over and you're not even thinking straight, essentially.
So I listened to some of your podcasts, and I know there's a gentleman who said about dating and so on. I'll tell you what, and again, I'm a polite person. I don't want to say bad things about people. I don't think professional investors should do that. It's a mistake. Angel investors, yeah, okay, go with your feelings, fine. Do whatever you like, fine. Okay, you're on Shark Tank, they like you, they don't like you, good. That's not the job of professional investors. That's not what you're being paid for. I said in the beginning, the best founders are not nice people to hang out with. Many of them, not all of them. Some people are nice, but not of them. So if you're judging do I get along with this person? Are they nice? Or some people say, I don't want to invest in founders who are difficult because life's too short. But that's your job. Like the outlier performance usually come from those people.
Man, that is a good breakdown. Okay, so what's one of the red flags that you see in those early stage investors that you're like, okay, we got to fix this now? Because if we don't, it's just could ruin you. Like, what's one of those things that's glaringly a problem to you?
One thing, and that's a good thing for your audience of founders, if the VC in front of you asks you or tries to ask in the realm of who else is looking at this deal, shake their hand, say thank you. Be nice, because maybe they're going to be following on you around, but they're not going to be the lead investor you're looking for. So that's, I think, for me, that's something that needs to be, as you said, solved in early stage VCs. Is early stage VC is about parallel, is about losing more money than more deals than winning deals. If you look at the stats, I have an article with 6 huge data sets on the parallel. The funds that do 3x plus lose more deals, so their loss ratio is higher, 60%. Than the funds that do 2 to 3x. So the great funds actually make more losses in terms of number of deals than the good funds, who are at 50%, right? So when for me, that's the big problem, is most people are not what I call parallel masters. Most VCs are trying to cover the butt to make a safe 2x versus going for a risky 10x, right? And for founders, the one sentence that you can throw them out is, who else is looking at this? Or questions in terms of what's the momentum? Because people who are usually the outlier performers in VC make decisions from first principles. They don't care about what other people think.
Man, what a good breakdown. This is really, I'm learning a lot today. I am. Because my personal goal is to be an investor myself long term. Mm-hmm. So I'm interviewing the investors. It's fun because I get to learn a lot of how they think, what they want, and how they make decisions. And so hearing your kind of contrarian point of view on this is really good. And I think that that's a big part of learning in this space particular. You have to remain open minded. You essentially have to. You can't just have this idea of I'm only going to invest in founders from certain schools or from certain areas of the country. Or if you operate that way, you kind of close yourself off from a lot of opportunity.
Yeah. And I tell you how I train those VCs who have been doing it for 10, 15 years. What I do is I don't talk to them like this. What I do is I show them 40 videos of the 30, 20, 30 best investors in the world over the last 20 years. And every time, so it's a little extract, 2 or 3 minutes, where they talk about their investment decision process. And every time what they talk about is the psychology. Every time. Like, Gary Tan, I have all these videos of Gary Tan, John Doerr, Brad, all those people, podcasts. Now they're everywhere, right? And after they heard these people repeatedly talk about my own psychology as investor, focus on the psychology of the founders, they become converts. Like that's how I convert them. It's not just big words and data, is they see how those top 20, 30 people make decisions. And that's how I came to it. Like I didn't have a preconceived notion. For 15 years, I was an investor and I was looking for, okay, how do I optimize decisions? And I looked at the deals that make great and the ones I failed. I couldn't see the pattern. I thought, I have to trust my intuition. And then I was listening to those people and I realized they all talk about the same thing. They all talk about their psychology and the founder's psychology.
Man, this is good. All right, people, you got to check out the VC Factory from Aram Attar. I think this guy's platform is going to continue to grow and expand because this is a very interesting perspective. It's fresh, it's new. And even if you don't have a ton of numbers on it yet, I think listening to what you say and how you break it down, it makes a ton of sense. So, man, thank you for being here and being such an amazing guest.
Thanks, Chris. It's great for giving me the platform.